Hello traders, welcome back to the channel. I hope you guys are good. So we are back again with another video. We are going to be learning about the other setup, the setup that I was teaching yesterday. We are just going to be viewing more examples of that setup. That same setup is here on EUR/JPY on the daily time frame. Let me mark this candle like this. On the daily time frame, it is the rally, base, rally. This is EUR/JPY. If I could mark it like this, I think there. Yes. So this is rally, base, rally. And if I put on the line chart, you can see it clear. Rally, base, rally. Breaking structure above here. So before we proceed, you guys have to subscribe to the channel. So we are on the road to 500 subscribers, and so far we have 430. So we have 70 more to go. I noticed a big number of you who are watching my videos are not subscribed to the channel, so you guys subscribe such that we can hit 500 subscribers. So we subscribe and then we continue with our video. Okay, so let's continue with the video. So now this is the daily time frame, and what do we see on the daily time frame? We have price made a rally 1 2, then a base 1 2 2 days, then another rally with engulfing candle and an indecision candle at that area. And if you notice that area also, we have an open close support. So price used this area as support, and then it went up with this engulfing candle. This is a daily candle engulfing the previous 2 days. So that means when price comes back to this area, we are likely to be buying. Okay, so that being said, this is just an example, but I want us to do that on the 1 hour time frame, since it's where most of the traders carry out their trading. So let's just see what is here. So now you have marked this daily area. You proceed to the time frame below, that is the 4 hour, to see. So now if you come to the 4 hour, that is where the problem is. The 4 hour, there were 2 zones. There is this zone here. There is this zone here. Very clear zone. See it? Very clear zone, which has drop, base, rally, breaking this structure here and this move away. This is not a decent move away, however it is a move away. So we can also count it, and you see there's a lot of liquidity down here. Why is that? Let me get it here. I think it is here. This one here. So there's liquidity down here. See that area there? Trend line, liquidity. So I expect this liquidity to be taken out, and then we go to the upside. So what happened here is we had another zone here, rally, base, rally here. However, there's no, I would use this zone when there is liquidity down there. So the right zone to use is this one. On the daily time frame, you're already in the trade. Let me see the daily. On the daily time frame, you'll already be in the trade. How would you be in the trade on the daily time frame? Because you would mark the whole of this candle like this. So you'll be in the trade with how many pips? You'll be risking around 90 pips to make 168. So far you would be in profit of around 60 pips on the daily time frame. However, we do not enter on the daily. So on the 4 hour, the right zone was here. Can price still come to the zone? Yes, it can still come to that zone. However, since the daily has been tested, maybe price can continue going up. So on the 4 hour, you're risking only 51 pips, 55 pips, 55 pips to make 200 pips. Okay, 190. That is 1:3.2 on the 4 hour. So what are you waiting the 4 hour? I want price to come, tap this area, tap our area, and then take us to the upside. This is a drop, base, drop, base, rally, and you see this is a low, high, lower, low, higher, high. This is a QM formation. Trend line was removed. So when price tap this area, and then we go to the upside. However, since it has tapped on the daily, it might not come back. Okay, so that was just an example, but we're going to have our trades on the 1 hour. That is why we're going to be looking for the setups on that the setups on that on the charts. So we shall proceed with the 1 hour. What I'm going to do, I'm just going to stretch, and guys, don't forget to subscribe. I'm just going to stretch, and then we start from as far as these candles go. So we're going to start from here. I think you can see this is where the plan stops. The candles begin from there on the 1 hour. So that is where we're going to start from to trace for those setups. Trace those setups and then see how many trades we would have gotten. Also, this is going to help you. This is going to help you to draw how to track for those setups. So the first one is, first of all, before, let me just remind you how the setup is. This is rally. Price makes a rally, then a base, and then a rally. So what happens is the demand zone remains here. So when price comes back to the demand zone, we buy and take it to the previous high or to the upside. Same thing with the sell side. Price makes a drop to bases and makes another drop. So we wait price to come to this base, and then we sell to the previous low. Okay, so now let's proceed. Anything like this, we are waiting for something like this here, and then we take it to the previous high. With that, we are going to be having a demand zone in this area like that. So the setup should look like this. Okay, so now let's proceed. So we have price made here a high, a low, another high. So within this high we had a high making resistance. Price came back, made another resistance there, then made another high. This is rally, base, rally. If you don't see it well, you can just go to the line chart. This price goes up, makes a break, then goes up again. Rally, base, rally. So as it makes here resistance, which will turn into support, it gives us a demand zone with a rally. Demand zone, it is here. That is demand zone. Mark it well like that. So rally, rally, making resistance. Price comes back and makes another rally, a base, and rally, breaking this structure here, leaving a support zone. So just go to the line chart, and then you draw your support zone around that area like this. So this is resistance broken will turn into support. There is a demand zone. So how do we enter here? Set our entries here, and then stop loss should be the previous low. However, I always want to use the stop loss with the ATR. So the ATR says 25. So my stop losses would be around 25 for this one. Where is it? 25. Yeah, the stop losses will be there, and the target is always the previous high first, which is 44, 1 to 7. But that one candle took you a 1:2, 62, and then you could hold it longer. A 1:8, 200 pips. 200 pips with just that setup. Okay, so let's proceed. Let's proceed. We are looking for only that setup. It's either drop, base drop, or rally, base rally. And guys, I told you with this setup, you can just come to the market and look at where we have another one here which was not respected. This one here, this is rally, base rally, very good rally, base rally, but price came back and did not respect here. So price came back, did not respect. Okay, try to react from the area. It even gave an engulfing candle, but it did not go far before it dropped further. So what I was saying is that you can just come to the market and then identify the zones. After identifying the zone, wait for price to come back to that zone. There is this one here. This one is even good. It broke this structure here. However, it did not give a significant reaction, and not all the zones are going to work out. So this one you wouldn't have lost it because it moved your stop losses, then later it came out, took you out. So let's proceed. I want to get as many setups as possible such that you can learn how to use them. And remember, there is this one here, but this is a small one. I think this one will be get on the 15 minutes time frame. This is rally, base, rally, breaking this structure here and this side. So you mark your demand zone here. Price came back and reacted, but it's not the one we're going to use. Instead, we are going to use this one: rally, base, rally. Look at the move eye, break of structure. So mark that area like that. So price comes back to there. You're targeting the previous high. Simple and precise. Stop loss. What does the ATR say? The ATR is saying 20, 21. So you're going to put 21 pips. Let's just make 25 is enough, like that. So when price comes back there, 1:266, it went up to 1:3 point something, 1:4. That is 100 pips. Just like that. Just like that. So after that, you went out. Then you followed your price action. Remember, there has to be a break of structure for that zone to be valid. So we have here a change of character here. This is a drop, changing this character, leaving a supply zone here. However, it was not tested. So price kept on making lower lows and lower highs, breaking structure. So now we have this one, drop, base, drop, this base here. So you mark the zone very well, like that. Mark that zone like that. This is a drop, base, drop. But the line chart, if you don't see it very well, it is there. So breaking this structure here. So we are waiting for price to come back to that area, and then we sell. Put your sales there. What is the ATR? 23. So your stop loss is going to be 23 pips. That is 30, 23 there. But this one was good. Okay, we're not going to be stopped out, but it was too tight, so it extend to at least 30. 30 break of structure. Then we drop to the previous high, that is 1:3, 97 pips, but it went up to 142. Good. So let's continue. Same setup. So we had this one, drop, base, drop, break of structure here. So we had this supply zone, but this one was used, drop, base, drop. It was used, but there was no breakout structure, so it is not one we would use. However, since we got one here, we can just mark it from here like this and then stretch it to the extreme end. Where is it? It is there. So where do you enter from? From here. Then stop loss here plus the ATR 21, that is 40. That is too big. Yes, it gives enough wiggle room, but it is too big. Target the previous high, that is 1:2, 83. 83 pips, you go up to 200 pips. So let's continue. So there was a breakout structure here. Which other break structure? There's one here, there's one here. This is, by the way, it gave a good reaction, but this is rally based drop. This is not the one we are looking for, but it also gave a good reaction when price came back there. So this one we just ignore because it is not the one we are looking for. So we have this one is not. Let's proceed. We have this one rally base, rally good mover, but price did not return back. Then this one price returned back. This is rally base rally. So mark the candle very well, like this. This one price came back, but it was a sniper tap in, and then price left the area so fast. So probably that one you would miss it. So let's continue. There is this one here. This one is a good one. Though it is tricky. This is rally, base, rally. Good mover, breakout structure. So we mark this kind of from the body to the wick. Yeah, it was a good zone. Gave a good reaction. So stop loss placement. ATR is 16 plus 30, that is 45. 45. Target the previous high first, 1:1, and then target the next, that is 1:2. 1:2. So as you can see, this one you would stretch it further. If you're patient, you'd hold it to around 200 pips. But that is not why we are here. So let's proceed and look for another setups. So far I've seen around 8 setups, but only one has lost. So there's another one here, rally, base, rally. Mark the indecision candle very well. You see the reaction. Price went up, tried to react there, did not reach, but this one came and reacted in very well. And then look at the movement. Very beautiful. So let's continue. There's no breakout structure. This one broke structure. This area here broke structure. So we mark it. Mark the incision candle, all of it. So price range then came, tapped us in and went to 1:2. Let's see. There. So that is a 1:4. So price went to 1:2 and then turned around. Probably there your stop losses should be above break even. So guys, setups are the same, just back test and see what you can get out of the setups. And here price changed some character here, started going up. However, it did not give us any entry zones. There was one here, but I don't think we were triggered in. So then after price changed character from here, it started dropping. Then we had this one drop, base, drop. So where do we mark? We mark this area here. This is the supply zone. Mark it well. And then we are going to put our stop losses like this. That is 18 plus ATR. ATR here was 22. 18 plus 22, that is 40. 40 is too far, so I would go for 35. I would go for 35, respected the area clearly, and then we target the previous high, which is 1:3, 132 pips. It went up to 160 pips. Good. Okay guys, I think I'll end there. The rest you can go and backtest yourself. We have another one here. Now this is a drop base drop base rally. Okay, that one no. Even this one no. There's this one here. Rally base rally. Good. So mark your zone, or mark my zone like that, like that. So now you enter from here. Look at the ATR. For here it was 20. So you're going to get this stop loss here, which is 18 plus 20, that is 38. So if 3 is 5, just to make 35. So that is 350, and then target the previous high, which is 61, 1:7. Then you would hold and go to 100 something. So that is all guys. The rest you can backtest yourself and see what you can get. I see one here, rally base rally. There is one here, good one. If you'd mark it, you'd get a good reaction, but price had already changed character here and it was already dropping down. There is another one also, drop base drop, reacted from this zone, then went up to react from the zone here, then dropped massively. So guys, that is all for today. I don't want the video to be long. Kindly subscribe to the channel if you have not yet subscribed. Also, if you have enjoyed or learned something from video, you can also like the video. So we meet in the next video. Bye. Practice the setups, you'll get used to them. Bye.